ATR, or average true range, is one of the most useful indicator out there. It is easy to use that even your dog can trade using ATR and become a millionaire. Average true range is loved by many professional traders so much because it solves one of the biggest problems in trading Forex and stocks. Atr indicator is used to set the stop loss properly, something that many new traders struggle with. If you are good at predicting direction of a stock, there is a high chance of losing money if you don't set your stop loss properly. If you don't set your stop loss and profit target at the right place, price can hit your stop loss first and then go in your desired direction. Unlike most indicators that are easy to understand but are difficult to use, average true range is always easy to understand and easy to use on all time frames. The ATR stop loss strategy is simple. I have also used this strategy in my $50 small account challenge series to set the stop loss at the right place. I will show the trade that I am currently in after we understand how to use this indicator properly. Here's how the Atr indicator looks like on TradingView. It will come with one line. By default, this indicator will come with the ATR length value of 14. I recommend using the default settings, as most traders will. What we are looking for on this indicator is the ATR value when we are about to enter a trade. We are not looking for an uptrending or downtrending ATR line. We only want this value. Like the name says, this indicator will show the true average value of a stock or Forex pair. On this chart, and by default, it is showing the average of last 14 candles. This information is very useful to avoid your stop loss getting hit before price finally decides to move in your favor. Let's look at an example. Let's say you wanted to sell a Forex pair. Maybe it is at a strong resistance, so you want to go short. Let's say this line is the resistance line. If you set your stop loss just above the resistance line, there is a high chance that your stop loss will get hit because there is not enough room for price to wiggle around before going in your direction. If you set your stop loss too far from your entry, you will not get a good risk to reward ratio, and that's not good. Here's what you should do. Instead of setting your stop loss just above the resistance, add current ATR value to your stop loss. In this case, if you enter trade at $1, and if you want to set the stop loss just above the resistance line, your stop loss will be of $0.50. Now if we add ATR value to this, your new stop loss will be of $0.80. By adding ATR value to the stop loss, you are taking average range of the last 14 candles into consideration. In other words, you are taking volatility into consideration. If the last 14 candles were big, the ATR value will be high. It means market is volatile and bigger candles can form, therefore, we should not set our stop loss close to our entry. Similarly, if the last 14 candles were small, the ATR value will be low. It means market is not that volatile and there is a low probability of a big candle appearing, therefore, we can set our stop loss close to our entry. Here's a real-life example. This is the trade I took on my $50 challenge account. First, I drew some support and resistance lines using multiple time frames analysis. Then, I saw prices near a resistance. Furthermore, MACD indicator was also showing a sell signal. Now all that was remaining to do was to set the stop loss. I didn't want it to set the stop loss just above this resistance lines. Since this is a small account challenge, I really don't want to get stopped out for setting a wrong stop loss order. So I used the average true range indicator. I wanted my stop loss to be above the resistance. To calculate how much above the resistance line, I added ATR value to it. My initial stop loss order was of 0.132. After adding the ATR value of 0.126, my new and safe stop loss was of 0.258. Then for profit target, I multiplied the stop loss by 1, since I was only looking for 1-to-1 risk reward. Usually, I take 1.5 to 1 risk reward, but I'm adjusting for this $50 challenge. If you are following the small account challenge series, I will let you know the changes I have made in my strategies in the next small account video. As you can see, this trade was a winner, but some people use this Atr indicator differently. In my case, I use the Atr indicator to set the stop loss and profit target. Some traders will use the Atr as a trailing stop loss. In fact, on some trading platforms, there is a similar indicator called the Atr Trailing Stop. The name says it all. It is based on the Atr indicator and is used to trail the stop loss in a trending market. On TradingView, it will look something like this. It will look very similar to a moving average. Just like a moving average, this Atr stop loss indicator will follow the price above and below the candles. You can use this to trail your stop loss using this indicator. Once you enter a trade in an uptrend, you can trail your stop loss just below the stop loss line. Similarly, in a downtrend, you could trail your stop loss just above the stop loss line. Here are some disadvantages of using the trailing stop indicator. The indicator works best in the trending markets. When the price action is choppy, the indicator will act weird and won't provide a lot of useful data. The indicator is based on the closing prices of the bars. Therefore, ideally, when using the indicator, you will need to wait for price bars to close before acting on any information the indicator may provide. But as you spend more time trading, you will get more experience and you will become a better trader. Then you should be able to identify range and trending markets. Once you start identifying the trending market, you can avoid the pitfalls this indicator comes with. But just like the trailing stop indicator, here are some important things you should know about the Atr indicator. Average true range only measures the volatility and not the direction of the trend. Do not make the mistake of using the Atr indicator to find the direction of the trend or reversals. The simplest use of Atr indicator is to set the stop loss. If you are looking for something else, use something else. There are many different indicators that do many different jobs perfectly. If you are looking for an indicator that provides entry signals, check out the MACD or Bollinger Bands video on this channel. I have tested those and many other strategies 100 times to show their real win rates. After all, you don't want to risk your money on a strategy that doesn't even work. That's all there is to it. Here's what happened to the trade we took as an example in this video. Our technical analysis was spot on. If you would like to see my positions and analysis on Forex, and if you find these videos helpful, support the Trading Rush channel on Patreon. Or maybe check out this cool t-shirt I made for the best traders. It supports this channel as well. Like the video if you liked it. Subscribe for more videos. And don't forget to ring that notification bell as well, so you don't miss future videos. Thanks.